So I think it's fair to say that a lot of people would never want the lifestyle of an investment banker. The late nights, anxiety, and receding hairlines. But perhaps we can still learn from them. What if you could run your life like an investment banker? Look, I went through it, so you don't have to. I want to give you the playbook without you having to work the 100-hour work weeks. I'm going to quickly explain each strategy in the investment banking toolkit and then suggest how you can apply that to your life. The first one that we're going to talk about is the precedent transactions analysis. The name sounds a lot more complicated than it is. It's basically looking at past deals, past transactions, and using that to make decisions about the current deal that you're looking at. Just to give you a quick example, let's say a client wants to acquire a car manufacturing company. It is the investment banker's job to figure out how much their client should pay for that company. With precedent transactions analysis, you'd look at historical deals where car manufacturing companies were bought. So let's say there was a transaction where someone bought a car manufacturing company for 200 million, and that car manufacturing company was doing 10 million revenue at the time. There was another deal which was bought for 500 million, and that company was doing 100 million revenue at that time. Okay, so you take those multiples and find the average. Your company, company C, is doing 50 million revenue, so you want to take the average multiple from your precedent analysis, and then you assess what this company should be worth. What does all of that have to do with you? Well, I think in our lives, we should sometimes apply the same method. A precedent transaction analysis of your life using the past things that have happened to think about the future. And I think this strategy is particularly applicable to times in our lives when we want to start something new and you're making a bet on yourself, on your ability to execute on your plans. I think before you make a massive bet on yourself, I think you should assess your precedent transactions. The last time I went to the gym, I got this outcome by going 3 times a week. Right now, I'm going 1 time a week. Well, then I expect the outcome, my physique, to look like this. The last time I felt happy and healthy, I was spending time with these types of friends, and I ate these types of food, and I lived in this sort of country. Right now, I haven't been spending time with those friends. I live somewhere else. I eat different types of foods. What kind of value can I expect? And I think what's also cool about this method is that it helps you think about where you might be overpaying. So let's say you spend 10 hours with friends who don't really help you become better, and the time that you spend with those friends maybe increases your happiness by just 2 points. That suggests a very low multiple. So after running this analysis is when you should start thinking to yourselves, where can I be investing in things that have higher returns? I think in short, sort of thinking like an investment banker leaves your life less to chance and more to data and trends. So another method is comparable analysis, basically comparing the company that you're looking at to similar ones in the market. That is great for finance nerds, but why should you care? Well, I think it can be helpful to think about those that you look up to, those that inspire you in life, and then going a level deeper and saying, what are the components of their lives that constitute to their success? So in a finance example, we can say, okay, this company has a massive market cap valuation, but what are the components? Well, the company has this EBITDA, the company has this amount of profit, it operates in these geographies, it has wide number of high margin product lines. I think it might be helpful for you to do the same analysis. This might look like, okay, this person seems pretty happy and fulfilled. Let's look a little bit closer. Okay, well, they have X number of close friends and relationships. They seem to do this number of new things every so often. They make good money. They're active and fit, and they have a creative outlet. Now I want to go one level deeper, which is what distinguishes between a okay investment banker and a good investment banker. Well, when you're making this analysis, you want to make sure that you're actually doing a comparable analysis, that you're comparing against the right peer group. Are you looking at companies that are actually relevant? Are they actually comparable? So I think in the same way, when you're comparing yourself to someone's life that you really admire, I think it's worth taking the time to do your due diligence. You might see this person's fitness levels and you see that they do Pilates, but then, as a good analyst, you do a little bit more digging and you find, okay, well, this person has had this procedure done, or they have this natural genetic physique that is very different from mine. Or you might see that someone has hit a certain number of key financial milestones. A little bit more digging might reveal that this person has help from family members that maybe you don't have. So I think you're best finding the most comparable peer group of people that are most similar to you. Similar baseline factors, similar values, similar backgrounds. You will obviously never find someone identical, but you should spend time in refining this list of peers. And I think what's really cool about the latest turn of social media is seeing people become more vulnerable and sharing their backstories. I think you should totally take advantage of this, follow and be inspired by the right people, the people who are the most similar to you. Okay, so the third method isn't about comparing to anyone else or comparing to your past self. It is about today and the future. The discounted cash flow analysis bases a company's value on the future cash flows that it can produce down the line. The easiest way of doing this forecasting is taking the historical and current growth rates and applying that forward. Let's say company Z seems to be growing at about 5% every year. The easiest thing is just to project that it will continue to do so. So obviously, higher growth companies will have higher valuation. For yourself, I think you should think to yourself, if an investment banker was doing a DCF on my life, would I be happy with the value? Would I be happy with that number? Ask yourself, if my future growth rates were based on the historic or the current growth rates, would I be happy with the value they arrive at? If I keep making the same decisions, where will I be in 5 to 10 years? Is my life's cash flow, metaphorically, growing at all? Or are things kind of flat? When you're making everyday decisions or even big life decisions, you should think about, how can this affect the future value of my life? Is it increasing cash or not? Is it increasing growth or not? Would a DCF conducted on my life as it is today produce a high result? Bankers use a bunch of financial metrics to help them analyze how a company is performing. Let's see which ones can be applied to our lives. Let's start with ROI, return on investment. When you invest your time and resources into things, are you getting high returns, or are you spending time on things that don't really move the needle? How much value, whether it is satisfaction or happiness, whatever your value metric is, are you getting out of the time, energy, and maybe money that you're investing into things like work, friendships, personal growth, etc.? Another metric that's quite cool is debt to equity ratio. You could see the debt in your life as the amount of time that you owe, that you are obligated to give. This might be through your job or family commitments, etc. You could see the equity in your life as the amount of energy and time that you have to give, like that you could possibly give. If that ratio is too high, then maybe you are giving out more than you have, and this can lead to burnout. So the next time you are faced with a big decision, consider taking a page out of investment banker's playbook. In summary, do your due diligence, base your projections on past or peer performance, and make sure you're getting high enough return on the resources that you're putting in. If you like this video, you'll also like my video on how investment bank changed my brain chemistry. Subscribe for more videos where finance meets real life.